My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. How can you tell if a company's changed its stripes? That's the question we need to ask about Magnum Hunter, MHR. It kind of sounds like a Dirty Harry movie, but it is in fact a small $1.2 billion oil and gas producer, $7 and change stock. Magnum Hunter has some terrific acreage across 3 of the biggest shale plays in America, shale plays that we talk about all the time, the Bakken, the Marcellus, and the Utica. However, for a long time it seemed like Magnum Hunter might not be able to deliver on its promise. The company kept being troubled by issues involving the balance sheet execution, even some mild accounting issues. Back in April, they actually fired their auditing firm, Pricewaterhouse, even though the company still had an issue that's already delayed 10K, and the stock dropped all the way down to 2. What an opportunity that was, because Magnum Hunter hired a host of new internal accountants. They got their 10K out in June, and all the accounting issues people were fretting about ended up being resolved benignly. Since then, Magnum Hunter has been one of the best performers in the oil and gas industry, roaring back up to the nearly $7 level where it is right now, even though its latest quarter reported back in April still had a little bit of hair on it there. Now on Monday, Magnum Hunter had a pretty darn bullish investor day. It's all online, where they talked about cleaning up the balance sheet by selling non-core assets. The plan is to become a leaner, meaner exploration production company. I like the sound of it, although we'll hear more about it when when they report their numbers on Friday. So has the company gotten its act together? Let's talk with Gary Evans, the chairman and CEO of Magnum Hunter, find out more about where his company's headed. Mr. Evans, welcome back to Mad Money.
Thanks for having me, Jim.
Thank you, Gary. You know, Gary, I mean, it was touch and go, and then I read through everything, including your last few reports. I mean, the ones you filed with the SEC. It just seemed like that in the end there was just like a dispute about the way the accountant was actually doing the job, and it sounded like maybe the accountant wasn't doing the job.
Well, without saying a whole lot, it's very unusual for a company to fire a Big Four accounting firm.
Right, that's what freaked us all out.
And I think that's what got you
because I'm used to the same thing. Oh, Big Four, they got to be good.
There's smoke, there's fire.
Right.
We hired a new accounting firm, the top 5th accounting firm in the U.S., BDO Seidman. They came in there, delivered an audit in 54 days, no restatement, clean opinion. So, I'm
glad you brought it up, because I was worried that there'd be a restatement, because I figured, hey, listen, look, we're all like this. We all hear big name, and I'm not going to necessarily slag them, but that scared people.
Sure,
and obviously, as soon as
it scared me in the board of directors.
I'm sure it did, and I'm glad you mentioned that, because I actually talk about it.
Scared. It's the worst time of my life running a public company.
Well, yeah, because, you know, here you are, you know, we figured that nobody fires an accountant unless something's wrong, and then you got a remarkable bill of health almost instantly, which showed that there may have been other issues not related, because no restatement basically means your assets were whole.
They're whole, exactly.
Okay, let's talk about the assets. I'm trying to figure out how people should view these companies. I think that looking at earnings is something we should do with Chevron. We should look at them with Exxon. But we should look at the net asset value of the properties with the younger companies.
Absolutely. An embryonic company like us, we're only 4 years old. We're out buying leases, trying to figure out where to be. And then we start drilling the wells. So you start looking at NAV, and that's why as more companies drill around us in the Utica, in the Marcellus, we prove up that acreage. And then you start drilling the wells, the cash flow starts coming, and you start trading on a EBITDA or cash flow multiple. But earnings multiple for a company like us is absolutely meaningless.
Now, when I see the properties you have, I say to myself, okay, why do you only have 2 rigs up there in that Willis? You've got some great acreage. Is that just because, in the end, rigs cost a lot of money?
Well, we actually have had off and on this year 4 to 5 rigs running up there, but we don't operate but maybe 20% of those properties. So we're at the discretion of the other operators who have other issues.
Right. Now, you used a figure called the $6 million well.
Yes.
Explain to people what the cost is of a well.
What's happened, especially in the Williston Basin, is that costs have continued to decline. We first started drilling up there 3 years ago. There were $9 million wells. Now they're $6 million.
You found a piece of land, and to get that oil, and that's the far down.
Drill, complete it, and put it on production costs $9 million. Now it's $6 million. We're in the shallower part of the basin. We're still finding 400 to 550,000 barrels of oil per well. At $6 million bucks, your returns are off the charts.
Right. Now, you also, though, I mean, you guys don't seem to be ashamed of some of the other companies about natural gas. I mean, you've got a chart here which says basically you're still half and half.
50-50.
Is that good? Don't you want to be like 80-20 oil?
I'm very bullish on natural gas long term.
Okay.
But I think the next year to 2 years, gas prices are going to be low, $3 to $4.50. However, if you're in the Marcellus and the Utica, there's not another gas basin in the United States that comes close to the low finding cost and the kind of volume.
Can you be like Cabot Oil and Gas, which turned out to be a total home run for nat gas?
And Range Resources, same way.
Range was the same.
Both of them. Those two companies, look at them 5 years ago. They were $2 billion market caps. Today they're 14 and 16 billion, all off of dry gas.
Okay, where are we in the country in your idea about how much oil and gas there really is versus what we thought? Because you're even in this Montana section, right?
No, we're not in Montana.
Okay, well, where is it? It goes out to...
We are in Divide County, North Dakota, right along the Saskatchewan border.
Okay, so it looks like to me that there's areas that you're in that we're just now beginning to realize have a lot more.
Well, the big boys have all moved in our area,
Yeah,
Continental,
right.
Oasis, St. Mary's, so they're in our backyard. So we tend to get in regions early,
Right.
and people go, oh, you're out of the fairway, what are you thinking? And then all of a sudden,
That's what I thought. When I saw it, I said, boy, that's a great term. I thought you were out of the fairway,
Everybody
but you're not
thinks that.
anymore, right?
We have a little bit of foresight. I've been in this business 30 years.
So what happens next? I mean, are we going to have a period where oil is, it's been down a lot, where we're suddenly worried about your hedges?
Well, fortunately, I hedged most of my oil around $94 to $95 a barrel.
Win.
And
For how
that's
far
all
out?
14 and 15.
Oh, so you don't have to
we're
worry.
protected. Same thing with natural gas. We hedged all the gas we could at 412, 402, 405. So we're protected 14, 15. We've got to undoubtedly find new uses of natural gas. We got to get gas to the Gulf Coast. We got to have LNG. This is a world commodity. Why not export it to the world? Natural gas is being paid for by Japan and China at 12, 14 bucks an MCF, and we're selling it for $3.50.
It's nuts.
Crazy.
That's why I understand. I understand the future. In the meantime, you got a lot of oil, and you're pumping it. Okay, now we know the whole story, and I tell you, it did throw me for a loop. I will admit it, because accounting irregularities equals sell. But how about a corollary? Accounting irregularities cleared up, it equals buy. Gary Evans, Chairman and CEO of Magnum Hunter Resources. Stay with Kramer.